Cheers, thank you. Hello, everyone. It's not because I'm a diva, it's because I have a tendency of breaking limbs at Money2020, so I wanted to avoid that. Hi, thank you for having me. And today we're going to be talking about my concept of emotional banking and the methods that are included in that. We'll start with a picture of something many of you here would have seen. Some of you are speakers yourselves. We got this beautiful piece of art sent to us by Money2020. My child adores it, and I thought I would tell you the story of how we ended up here. So essentially, for those of you that have been reading what I write, or that I've been working with, or the bankers that we've been building stuff together, I do apologize. It's really hard to kind of change slides when you're telling your story, so a lot of the stuff is going to sound familiar to you. But the point here today was that we kind of unravel what I came up with in terms of emotional banking as a method, because realistically, I'm not going to be doing that full-time from here on. I've recently accepted a position to go back into technology, and I'm really excited about that. So now I have to leave you guys with it. So, okay, back to the story, which you probably heard before. I started in FinTech ages and ages ago, essentially 7 years maybe now, but it feels like the Stone Age, because that's kind of when FinTech started in general. And I was lucky enough to start with a company that was at the heart of all of this. Some of you here know it. There's hopefully some of my ex-colleagues in the audience. The company is called Meniga, and what they do was very central to how I ended up where I am today, because they sell PFM, which is personal financial management, which is a very, very connected product to the lives of all of us, right? So I saw a lot of those conversations in terms of design, in terms of product, in terms of what it is that we need to be doing so that we get our consumers to love us in terms of their finances. So I was lucky that the product was awesome, and I was also lucky that I was coming into the industry at the time that we were just building all these things. Which meant that because we were a product company, we got to speak to all these banks, probably hundreds of them at that time, really cool people that are now your heroes, and you've seen them on stage over these past few days. And they were those that kind of built the first digital propositions, the first mobile apps you see, the first sites you see, and so on. But what I didn't see at all, despite the many years of kind of building things, was where is it that we sit down and think of what it is that our customers feel about their money. So there was a lot of conversation on building products, building digital propositions, but I didn't see how we came up with the type of deep insight into their feelings. So my feeling at first, my impression at first was, I'm just not enough of an insider in the industry. One day, kind of when they will trust me, they will take me there. I have a background in psychology, and I was convinced these amazing labs must exist somewhere where banks who have all this money and all these people would sit humans down and figure out how they feel about various things. Is it that your bills are making you anxious? What's good money? What's bad money? All those things surely must have been studied somewhere. But the more time that passed, and I'm talking like 2 or 3 years in digital, which is forever, it didn't look like there was anything. And I couldn't get it, because this is such a pivotal part of our lives, right? So aside from our love life and our family life, there's nothing more important than our relationship with money. In fact, there's a statistic, and sometimes I get it wrong, but I get the gist of it, so you guys can look it up. There's a statistic in the UK that says that the average time span that you are married to someone is 12 years, but the average time span that you have a bank account relationship is 17. And yet, we don't seem to sit down and wonder what really makes this entire relationship work. And you know, kind of the more time was passing, the more I realized that these labs don't exist. Banks don't sit down to wonder how we feel. They make a product, and then they ask us to change our lives around it, instead of us kind of telling them what it is that we need in terms of our true feelings towards our money. And then I wondered, why is it? Why are they doing that? Is it because they really don't care? I mean, I was meeting all these amazing bankers who cared, who had heart, who were interested, who were building the future of digital, so it couldn't have been that. And I was I was really adamant that, bankers are nice people. That's not it. It's not that they don't care. So there must have been something else that was kind of stopping these clusters of amazing people from doing that type of work with their consumers. And the more I thought about it, the more I decided that I'm going to be a superhero and leave my FinTech situation in Meniga and do this full time. Go out there, tell banks kind of what needs to happen so that they start thinking of their consumers. So I left Meniga and I started emotional banking, which was essentially my consultancy to sit down with banks and get them to do human-centered design. Easier said than done, without a doubt. And what I realized is that I need to start with the right questions. Why is it that banks don't seemingly care? Why is it that they don't take the time to figure out what the consumer needs? And as time passed, I realized that it's all about a couple of things. First of all, banks are not brands, right? So if you look at this particular picture, those are the top millennial brands. You're not going to see one bank in there. Whether you're talking challengers or incumbents, it doesn't matter. They're not in there. And maybe give challengers a few years. Maybe they're going to end up there, hopefully. I hope so, for their best interest. But unless some of these guys become a bank, there's no bank in there. So number one, they're not a brand. I mean, if you look at what a real brand is, and if you talk to a banker about brands, that would be interesting. If you talk to a banker about brands, they would believe you're talking about marketing. And they'll tell you that they have the right colors, they have a great marketing team that sends out the right press releases, so surely their brand is fine. I mean, it took me a long while to realize that the understanding of what a real brand is in terms of how to arrive at a consumer that loves you didn't exist in banking. And kind of the more time that passed, I was trying to show them examples of things that really worked. For instance, everyone who's been to London and been into a Burberry shop knows that that's an experience. There's nothing to prevent us from a branch doing the same thing, but it's not exactly like we're doing that. This is an airline, this is a brand, it's an airline in the US who is, everything they do, whether it's customer care or marketing or talking to consumers, is built on how do we surprise and delight them. And then, there's examples like Disney, who does payments better than we do in this industry, and then that's just because that's not a thing. The thing has to be the experience. And then, there's my favorite. I have a small obsession with Ted Baker. And that's because they've understood how to do messaging really well. For anyone here that is a client of theirs, they'll know what I'm talking about, and it's almost an inside joke. It's how good they are. The type of messaging they're doing is internal. It's to their own consumers. So I know that they have little messages for me on the soles of my shoes, but you guys probably don't know if you don't have them. So the conversation with the consumer is very intimate and very, very powerful. We don't do that in banking at all. And then there's the ultimate brand, right? Who doesn't recognize that? But they didn't get there for no reason. And one of my favorite things to talk about with bankers is when they claim that this is irrational loyalty. There's nothing irrational about liking Apple. They have a product. They have many products. They're amazing products. You love them. You fall in love with them. You stay in love with them. It's very simple. There's nothing irrational. What is irrational is that anyone would ever kind of fall in love with their bank and stay there, which they don't, as we know. Now, this is how I know that we are not a brand. Who in this room knows who this woman is? Can someone just raise their hand? Anyone in the room knows who she is? I'm not going to ask you if you know, but one. Right. That's why I know we're not a brand, because we're not a retailer. And we're not a retailer because we don't know who this woman is. Her name is Zoela. And if she doesn't like the shade of lipstick that you're putting out, your sales will drop by 52%. If she doesn't like the current account you're putting out, very likely nothing much will happen. And then there's the point of kind of, which brings us to this issue, right? There's no imperative. There's no reason for us to know who Zoela is. There's no reason for us to really care, to really build a brand. Because realistically, if you look at the amount of people who want to switch a bank, and we've heard all these statistics over the last few days, there's 3% in the UK despite our better efforts. I'm sure that's going to change with the challengers. So with all the caveats in the universe, it's not exactly like we have an imperative from the point of view of customers moving. So that's a slide from one of my friends, Jim Marus. It's probably oldish, it's probably from the US, but however we spin it, people are not changing bank, which means that us as bankers can breathe in and calm down and not care about how it is that we can kind of keep them in. Now, this is what changed 2 or 3 years ago, right? So if you look at this slide, and don't worry if you can't read it, we're all bankers in the room. No one cares to read this properly. But they are all FinTech brands, and they are brands to consumers. And these guys are likely going to end up in that first slide eventually, whereas I'm not sure that HSBC is going to make it. But this is kind of what changed a couple of years ago, right? We all know the big FinTech rush, gold rush, and so on and so forth started to happen. We started to listen to it. Things were changing. There was all of a sudden a hint of an imperative. Maybe we should start becoming a brand. Maybe we should care. Now, has anyone seen this online? I promised that I'm going to use this slide, and it inspires me to use it quite a lot today. So this is what happened about 3 weeks ago. There was a tornado, or maybe a month ago, there was a tornado in the US. And this guy was photographed just calmly mowing his lawn. So journalists showed up to his house, and they asked kind of what's wrong with him. And his answer was, and I think this is priceless, it's fine. I was keeping an eye on it. And this is precisely, I think, what banks were doing. They were keeping an eye on it. So it's all this tornado of FinTech in the background, but let's not freak out. Let's just keep an eye on it and keep mowing the lawn. Now, okay, so this is what I arrived to. They're not brands. They're keeping an eye on it, but not doing much about it. How is it, if they turned and they looked at the tornado and they freaked out, what should they be doing, right? So that was my next kind of question. And this is what I came up with. It's not about the type of technology, it's about the people that you have that can look at the tornado, which you heard a lot of this today at this event, and that to me is amazing news. The fact that we're talking about people and not technology, that's new. That didn't happen last year at Money2020. That didn't happen in most of the conferences you've seen. This is new. The industry is finally arriving there. But what I'm talking about was about maybe 2 or 3 years ago when I was coming up with this. And essentially, my answer was, you need the right people. And the right people are comprised of 3 things. 1, they have loads of brain. 2, they're very courageous. They have, I would have wanted to use another word, but I'm sure we're being taped. So they're just really, kind of out there. They have courage, they have bravery, and then most importantly, they have passion. So there's 3 things, right? They have brains, they have courage, they have passion. And I thought to myself, okay, well, we can't fire everyone who doesn't have these things, and we can't hire only the people who do. So what we can do is kind of try and empower some of these things for the people that we do have in banking. And to empower those things, I came up with essentially the emotional banking methods, which are described in this book that's coming out later this year. First of all, so there's literally 2 methods. It's not going to be long, and it's going to be very simple. First of all, the first one is called the Keep It Real program. And what it does is it helps with one of those things, and the second method, helps with the other one of those things. There's one of the 3 that I can't help with at all. I'll let you work out which one that is. So this part of the program helps with the courage thing, right? Because what it does is it looks at the most important bit of kind of the way we work in banks, which is communication. And the first thing I've noticed was that we had kind of stopped talking to each other in English, and we were just saying consultancy stuff without really meaning anything. And I was stunned by that. I couldn't believe that we would let that happen to us, because we have so many important problems to discuss and so many business models to invent and so much complex technology to understand, and yet we insist on translating it into stuff that doesn't mean anything. So my first move was, we got to fix this language issue. So what I do with banks, and I worked with 3 banks on these methods. One of them you may have seen yesterday. I'm really proud of them. It's Dr. Giulia Furedi was on stage yesterday, and she was part of one of these 2 methods, so clearly this stuff works. But I haven't done this bit on the language with them. I've done the other one that I'm going to show you in a second. Now, with the banks that I'm doing this with, what I do is I sit them down and we look at how we say what we say, both in marketing and internally, and then we translate it to English. It's a full-day workshop of how to start speaking English again, and kind of I was going to name a consultancy, but I shouldn't do that. Just deconsultancy your language. And then the second thing we do is much more fun, and it's called a swear fest. It's a half-a-day workshop. It's not a full-day workshop. You can't swear for a full day. That's not a good thing. So what we do in that one is I like them to just give me all the swear words that they can in a certain frame of time. It's really uncomfortable, horrible. Can you imagine a room of the guys that you saw from Chris Skinner yesterday at that table trying to make them swear? It's really difficult. But once you get people going, it's an amazing effect. And you'll see them over the pub conversation later in the evening, not swearing, not talking about porn, not talking about weapons. They are actually starting to discuss bits and pieces of their process internally in the bank that they hadn't before touched, which is an amazing process to me. So as long as you can keep people real in terms of their communication internally, you already have an amazing win. And then the second thing that was going to attack the problem of passion is my Build a Voice program. So essentially what this was how do we get the right people to build their own voice in FinTech, to find FinTech, to fall in love with FinTech, to start joining the dialogue, to believe in it, to be passionate about it, and then kind of carry that down. And the main thing about it is, in the method described, is the fact that I need this to start as high up as possible with as CX level as possible so that you can kind of trickle that down within the organization. So what I do is essentially a very simple evangelist program, if you wish, right? So you go to the right people, you empower them with knowledge real quick, show them what's what, how things go in and out of FinTech, what's a backend, what's a front end, what's a middleware, why Chris Skinner is important, all those things really quickly. You get them up to speed, and then you ask them to have an opinion, and you ask them to start being part of the conversation. And something really magical happens, which is FinTech is addictive. That's sugar, by the way. So, FinTech is really addictive, which means that all you need to do with people in banks is kind of bring them to the water and they'll start drinking it. It's amazing. And what I've seen happen in organizations where I've done the Build a Voice program is an absolute internal revolution, if you wish. So these are the two methods. They're described in this upcoming book. That's not the real cover. I've made that myself with my amazing UX and UI skills. So they're described in there. There's nothing more to it. I'm looking for a home for the method so that I'm talking to a couple of consultancies who are hopefully going to be able to take it over and then kind of bring it to banks, hopefully not destroy it as well in the process. But the point I'm making is, I think these three things, right? Courage, brains, which is the missing link there, and heart are going to be the things that are going to allow bankers to turn around and look at their tornado. In particular, because this tornado is no longer those 5 people from TransferWise who never make it. It's a lot of other things. You have your challengers there, you have your big 4 technology people there, and then you have your big PSD2 gorilla in the room. Thank you very much.